Investment targets from world consumption downgrade. One of the brightest performers among Chinese stocks at the moment is undoubtedly PD. Last year when I was tracking Tume, the world version of PD, I was bullish on the potential market demand from consumer downgrade. You can refer to my previous reports or YouTube videos if you are interested in it. And after more than a year, a third quarter earnings report made PD realize a magnificent turnaround. Revenue up 94% year-on-year, operating profit up 60%, adjusted net profit up 37%. Very weighty data was announced. PD shares immediately rose more than 18% in the evening of November 29th. Its market capitalization surpassed Alibaba and became the highest U.S. stock market value of the Chinese stock market. Bloomberg even called it is a watershed moment for China's internet industry. The reason why the capital market would like to pay for the bill, one is because of PD's cost-effective positioning. And rational consumption is becoming mainstream fits perfectly, the first to seize the dividend. The second is because of the large-scale investment in world, temu as the second curve of the growth. Today, I would like to introduce another company that deserves attention in detail. It is also a company with these two advantages, which is very similar to PD MINISO that also based on the ultimate price-performance ratio. In the third quarter of this year, the total revenue amounted to 3.79 billion yuan. A year-on-year increase of 37%, setting a new record for a single quarter. The gross profit margin reached 41.8%, a year-on-year increase of 6.1%. And the adjusted net profit non-IFRS of 640 million yuan, a year-on-year surge of 54%, hitting a new record high. Meanwhile, both its domestic offline business and world business maintained a year-on-year growth rate of more than 40% in the quarter, setting a record high. Benefiting from the favorable results, after the release of the earnings report, the share price of MINISO quickly rose, once rose more than 5%. Compared with the same period last year, the share price has increased more than 6 times. The U.S. stock price annual cumulative increase of more than 80%. Today, I will make a detailed analysis of the business model, business risks, investment advice of MINISO. MINISO's management of strategy superstore. Since launching its globalization strategy in 2015, MINISO has been rapidly expanding its global coverage and is now in 107 countries and regions around the world, with the number of stores exceeding 6,000 for the first time as of the third quarter, reaching 6,115. The net increase of 126 stores world is the highest number of world store openings in a single quarter since 2020. Growth in number of stores opened. Growth in revenue per store is a very basic and plain revenue model. Therefore, in the rapid opening of stores at the same time, the brand has utilized the superstore strategy, that is, by making the store bigger, in order to increase the revenue of a single store. According to the latest financial report data, the GMV of world single store of boutique has increased by 27% year-on-year. And the average number of stores has increased by about 12%. MINISO has revealed in the earnings call, the average single store sales of superstores is 3 times higher than that of ordinary stores. The customer unit price is 7% higher, and the inventory turnover rate is 20 days less than that of ordinary stores, which is significantly better than that of ordinary stores in terms of both return on investment and payback period. There are also a number of specific cases to support. New York's Times Square flagship store's first-month performance of nearly 10 million yuan. Indonesia's popular shopping center Margo City Mall opened the first Sanrio Limited theme store. The first day of sales in Southeast Asia hit a record high in the history of the store, the first month sales of more than 6 million. The flagship store on Oxford Street in London, England, is also the largest store in the United Kingdom, covering an area of nearly 3,000 square feet, and is the largest store in the United Kingdom, with an area of nearly 3,000 square feet. The flagship store on Oxford Street in London, England, and by far the largest store in the United Kingdom, covers an area of nearly 3,000 square feet, and its performance on the first day of opening broke the record for stores in Europe. This actually points to another value of superstores, building super brands. Through the design of special product experience areas and IP-themed scenes. Each store has realized the integration of store and exhibition, in which consumers have a more intuitive and vivid products and IP immersive scene experience. In this way, it not only promotes the conversion of consumption, but also enhances brand recognition and influence. MINISO's management of strategy global localized operation. In addition to the global superstore strategy, MINISO has another growth engine, global localization. This is directly reflected in MINISO's product innovation. When selecting new products, the world team will select products according to the needs of different markets from the huge big pool of products at the headquarters, which is quite flexible. At the same time, the team will also be based on the insight of local consumers, targeting to do localized design and development, whether for a particular holiday, season, or local special cultural needs. There are products to quickly respond to market demand. Localized product design and development is also a reflection of a deeper understanding of the target market to meet the needs of consumers, which is also very beneficial to enhance brand awareness and influence, as well as sustainable development. MINISO's management of strategy co-brand to attract young people. MINISO prioritizes the selection of recognized world-renowned IPs, spends at least 1 year researching and investigating IPs, produces reports on IPs based on a combination of social media, private domain, and third-party research data, and develops a full life cycle development and inventory management plan for each IP to output products that are more accessible than official derivatives with the ultimate in supply chain efficiency. In terms of product development, the company implements the 7-1-1 concept, selecting from 10,000 product ideas and launching about 100 SKUs every 7 days, signing contracts with more than 80 copyright holders in the past 10 years, and opening more than 5,500 stores globally. Relying on the high-quality supply chain of China, it exports price-conscientious products to the world. Supply chain, exporting all kinds of goods with conscious price to the world. For example, the popularity of the movie Barbie set off a worldwide pink consumption storm. Among them, the co-branding of MINISO and Barbie is quite powerful. On the eve of the movie's release, MINISO took the lead in launching a series of new products with the theme of Everything Can Be Pink. And more than 120 co-branded products were launched globally. According to the official disclosure, only 5 days after the launch of the Barbie series, nearly half of the categories have been sold out on the whole network. And many stores across the country also announced that the popular products were off the market and set off a help-to-buy craze on the internet. MINISO has been exploring the innovation potential between the brand and famous IPs, and building differentiated competitiveness with IP products. As of December 31, 2022, MINISO has reached in-depth cooperation with more than 80 famous IP partners around the world, such as Disney, Sanrio, Pokémon, Jurassic, and the Palace Museum Culture. MINISO has already worked out a set of mature IP operation mode, constantly bringing users newer experiences while conveying deeper cultural values. Obviously, it has made great efforts to enhance the emotional value of its products, providing additional emotional premiums with its IP-enabled products, and succeeding in taking this business from young people. Potential risks. Last year, Temu took the lead in launching the full hosting model, in which factories and merchants only need to supply goods, and the platform is responsible for pricing, sales, fulfillment, and after-sales. This model, first of all, thanks to the strong domestic supply chain, can be used as a source of goods. There are a large number of factories and merchants to follow the platform. Secondly, the platform has very mature big data and algorithmic ability that the most cost-effective goods push into the explosion, followed by a unified domestic warehouse distribution model and World cross-border direct mail distribution model, the platform ensures the fulfillment ability. Similarly, with the help of the domestic white label supply chain, the quality upgrading strategy of MINISO has faced the design and aesthetic upgrading and experience upgrading. But it is difficult to improve the quality of the product inside. In the era of consumer downgrading, the weight of price is needless to say. In the North American market, which is trying to build a global demonstration store, there are also Dollar General, Five Below brand stores that focus on $1 and $5 to carry out direct competition with PD on price. But brand equals quality. The low-cost supply chain that famous brand is proud of has helped famous brand expand rapidly, while also laying hidden dangers related to product quality. Once again, the co-brand can bring the hidden danger. The brand upgrading of MINISO nowadays is also facing similar worries, because MINISO relies on IP co-branding to upgrade some of the products. The company in the formation of differentiation at the same time quickly pull up the level of gross margins. However, the continued increase in price levels may shake the stability of the business model, giving room for low-priced competitors to enter. Investment outlook. Like PD, the new development phase of MINISO has just begun. In terms of actual performance, its new story has already impressed the capital market. And with such a large globalized consumer market, its future growth is predictable and worthy of long-term attention. However, that doesn't mean it's the right time to buy it now. We need more investigations. From the long-term growth view, there are two aspects need to pay attention. The first is still the expansion of stores. Due to MINISO plans to expand globally, the specific number of stores to open, although it is difficult to estimate, far from reaching the upper limit, the same store data can be maintained or even positive growth. The second is to improve the efficiency of the store. The efficiency increases from two aspects: the increase in the number of SKUs and the enhancement of the value of the products. The number of SKU increase space I think will not be too big. Too many SKU is not suitable for C2M retail model. Single store 3K 4,000 should be the limit. Merchandise value is to enhance the space. Co-branded models have this effect. But keep the low price strategy is also very difficult in the short term. Within 2-3 years should be increased. The premium is not too high. Certainly, I still put the MINISO into investigation pool because of its potential and high expectation. I will take a close look on MINISO. Keep tracking.